Okay, yes, I can see now people are coming on. Great. Hi, I'm Lori Atwood with Fearless Finance. And hey, Alyssa, good. You can see me. That's great. And sorry about that little technical glitch there. Anyway, we're here to talk about financial planning in the time of COVID. Oh, hey, Angelo, great to see you. And Nick, great to see you. Although I think that's probably Kim and not Nick. Hey, Janelle, thanks for coming up. So I got a bunch of great questions from my clients, as I always do, through the week. And so while you guys are signing on and getting comfortable, I would like to start with those because I think they're going to be relevant to a lot of people. So I loved this question. And so I put it at the very top of my list. And the question was, how can I give back in a time of COVID? How do I know if I can afford it or what I can afford? And, what should I be trying to do? So obviously there are non-financial components to this question, right? I mean, these are very, very deep personal questions, but here's the financial part. So if you're somebody who has people who service your home or your business in some capacity, maybe it's a cleaning service, maybe it's a landscaper, maybe it's the person who cuts your hair or does something like that for you. The best philanthropy is going to start locally. If you can manage to keep them employed or send part of what they typically make from you while everyone's on lockdown, you are doing the best service you can do, because we have to start locally and move outward from there. If you are doing fine, there's no chance that your income's going to change, and you're seeing the misery that's out there and you want to do something, I think that's fabulous. Wherever you tend to go to do your philanthropy is going to be a great place to start. And I'm certainly not in a position to help you with that right now. But what I can say is that the IRS has given up to $300 of straight deduction, even if you don't itemize your taxes, for up to $300 of giving during this time of COVID. So if you stroke a check to the local food bank, make sure you get a receipt, either by email or on paper, with their 501c3 designation, their full name, so you can keep that for your accountant. And if let's say you gave $100, then you should be able to get $100 straight deduction no matter what, even if you don't itemize. So let's be kind to people who are less fortunate, as we always are. I know everybody who's watching me is, because my clients are really philanthropic. I'm really lucky. But yes, you absolutely can and should. I would start locally, continue doing what you can do for the people who provide services to you in your neighborhood and your house, and then branch outward, either maybe through your child's school or a local food bank or whatever it is, and make sure you keep the receipts because you could be eligible for a deduction on that. Okay, next question. I got several questions on emergency savings. So what I'm going to try and do right now is tackle all of them right now. So I'm kind of grouping them together. They didn't come in all together. So the one question from Mark in DC was, should we have a bigger emergency savings fund now because everything is so volatile and there's a recession coming, et cetera? And then another question was, how do we treat credit cards? Like if you have had a reduction in your income and you are needing to use your emergency funds to supplement the household, should you burn up emergency funds, or should you maybe let some stuff ride on the credit card over the 30 days and have a credit card balance? And then the last one was, for someone who hasn't already saved for an emergency fund and is now panicking, what do I recommend? So let me try and tackle all of those here at once. So the first answer is, yes, it is a time to have more rather than less emergency savings because, and here's why, emergency savings is for a total and complete loss of income. That, hey, Kim, that could be due to a job loss or a reduction in income. It could be due to any number of things, especially now, illness, disability, whatever it is, right? So what I urge people to do is, if you are in a great position and you have an emergency savings fund and you're collecting your unemployment, or maybe you're partially employed, or maybe one spouse is still employed, the other one is not, figure out what you need to run the household each month after trimming things that you don't need, right? Figure out what you need, and then treat the emergency savings as if it were a salary. So if you're down $2,000 a month based on a reduction in your income, then auto transfer $2,000 from your emergency savings each month and still live within your means. Now, with that in mind, how many months should we have? How long might this go on? And this gets to Mark's question. Typically, I'm looking for 3 to 6 months of a loss of income, because in a typical economy, if you lose your job for whatever the reason is, you can probably find another job within 3 to 6 months that pays at least the same amount, or of course more. Well, that may not be the case now. So what you want to look at is how many months it would take you to replace that income. That's the big question now, isn't it? Right? If some job goes away, and certainly if it's in the, if you want to call it the high touch economy, where you're within 6 feet of people all the time, like a hairdresser, or a dentist, dental hygienist, or something like that. If it's high touch like that, then it could take a while for you to get another job like that with the same pay or more. So the 3 to 6 months rule of thumb, I just noticed a lot of glare from our window. Sorry about that. The 3 to 6 months is maybe more 6 to 9 months now. Now, the challenge for all of us is, if you don't have that money and you're not having any income, there's no way to save and increase your emergency savings. So that advice is really directed at people still working. If you are still working, I urge you, as I've urged you on every one of these calls, whatever margin you have at the end of the month, keep it in cash savings, money markets, high yield savings accounts, cash equivalents, to increase that emergency fund. And yes, I would recommend 6 to 9 months now. So the next question in that sort of emergency savings cluster of questions was a great one. What do we do if we need that, say, $2,000 a month, and we could use credit cards for some things and then make the emergency savings last longer? All you're doing there is robbing Peter to pay Paul, essentially, and you're paying Paul at maybe 22% interest. So that's not the best idea. What you want to do, if you're in that situation, is really sit down and think about how many months you're going to be in that situation. We talked about Plan B on some of my COVID, my snippets, my little videos. Think about what the Plan B is. How long will it take you to get another job that's similar enough in pay, or a bunch of little consulting jobs from, Upwork and Freelancer and Fiverr and all of that to fill in? Figure out with your spouse, if you're married, what that gap is every month, and parcel out the emergency savings. Cut everything you can cut. And then, and only then, if you run out, then you can consider using credit cards. But my gosh, that is a last ditch effort, because then, as you well know, we then hit a cycle where once you have a job, we're having to pay down this credit card, and we've lost some cash flow. And after a recession, a lot of times the jobs that you get don't pay quite as much, maybe slightly less. You've taken a slight cut in pay, and you can never kind of get ahead of that wave. So the top things always are cut everything you can cut, while leaving a little bit for discretionary, because there's always some. And then use your savings and parcel it out monthly as if it were a salary. See how many months you have. And then the last ditch is credit. Ugh, I hate even saying that, but I know that times are tough, and that's sometimes where we have to go. So in the last question in that cluster of questions is for someone who's already saved, hasn't already saved an emergency savings fund, I touched on this a few minutes ago. If you get that I touched on this a few weeks ago. If you get that stimulus check, if you are getting the little, tick up in unemployment, I'm going to talk about all of that in a few minutes. If you have any money that you can squeeze together and save, push it over to a savings account. Get it out of the checking account. It will get spent. Move it to another account. I like tax refunds and the stimulus check for those things because you didn't expect them to come, and they're in one check, and a lot of times you can just put them aside. That's the best way to try to start doing an emergency savings account. Another way is with a project or consulting gig that you didn't expect. Take that money, make sure some is set aside for the tax man, and put it in the savings account. Those are the best ways to try and save. If you are experiencing a reduction in income, it's very hard to save at the same time. If you have lost a job or lost part of your income, the goal is maintaining. The goal is not accumulating credit card debt, and far less of a goal is saving during this period. Saving is for people who are fully employed as they were. That was a lot that I just went through and probably a little confusing. Please go ahead and put something up in the comments if you have a question over anything that I just went through on emergency savings. Okay, so another question that I got through the week was on PUA, right, which is the COVID related, it's the federal unemployment for gig workers and 1099 workers. Okay, let me go through some definitions because I actually found this hard to understand, and I do this stuff for a living. There's unemployment from your state. You need to, generally speaking, I don't know every state in and out, but generally speaking, you need to have been a W-2 employee to some firm somewhere, and you need to have had that relationship severed, and you have to be able to prove that, and then you may be eligible for unemployment in that state. If you're a gig worker, you're a 1099 worker, you drive for Lyft, you are, you're a consultant, any of those things, you are not generally eligible for your state's unemployment relief because you need to be a W-2 worker, but you could be eligible for PUA, right, which is the federal government's unemployment. So in general, every state's different, but in general, you have to apply to your state, be rejected because you're not a W-2 employee, and then apply for PUA. Okay? PUA is different than the extra $600 of federal aid to unemployment recipients. I wish I could see all your faces now to see if everybody's getting that, because that's complicated, right? So say I'm a Lyft driver in Maryland and I can't work anymore. I would apply to Maryland unemployment. I would be rejected because I know Maryland requires a W-2, right? I'd be rejected. And then I would apply for PUA. Hey, Rick, thanks for joining us. And then I would apply for PUA. God willing, I would get it. I hope I would get it. And on top of that PUA, I may be eligible for the extra $600 per week from the federal government. Now, you must apply separately for PUA than your state's unemployment. Many states, I know this is the case in New York, I'm not sure, you'd have to check your own state. You can apply simultaneously. You first apply in your state, and then the next button you click is for the PUA in your state. Some states require you to get rejected first and then apply. So you're going to have to read up on that in your own home state. The $600 of unemployment should come naturally through the federal government on top of your unemployment benefits if you are eligible. And it may not come in the same check. It may not come simultaneously, but it will come automatically. Oh, that is very complicated.